In 2007, Jeff Bezos paid $0 in federal income tax. Zero. The same year, his company Amazon reported $1.5 billion in revenue. The same year, his personal wealth increased by $3.8 billion. $3.8 billion in wealth growth zerintash. And in 2011, he did it again. Zero. Why you? You paid thousands, maybe tens of thousands, on a fraction of his wealth growth. This isn't rumor. This isn't speculation. This is verified fact. In June 2021, ProPublica obtained and published years of confidential IRS data on the wealthiest Americans. The data was irrefutable, the pattern was undeniable, and the conclusion was devastating. The richest 25 Americans paid a true tax rate of 3.4% between 2014 and 2018. 3.4%. While the median American household paid 14%, while you probably paid closer to 24% when you factor in all taxes. But Bezos' rate was even lower, 0.98%, less than 1% on wealth growth of $99 billion. $99 billion. He paid $973 million in taxes, which sounds like a lot until you do the math. $973 million on $99 billion. That's 0.98%. You paid 25 times that rate on infinitely less wealth. And here's what should make you sick. This is Lego, completely legal. Not tax evasion, not fraud, just the tax code working exactly as it was designed. A system deliberately constructed over decades to ensure that wealth, real wealth, is never taxed. Only labor, only income, only you. Let me show you how the scam works. How the ultra-wealthy built a parallel tax system that you can't access. A system where borrowing is living, where dying is winning, where wealth compounds tax-free across generations while you fund roads they drive on, courts that protect their contracts, and a military that secures their global empire. You pay for everything. They pay for nothing. And the gap between what you contribute and what they don't, that's the transfer. That's the theft. The mechanism is elegant, simple, and completely invisible unless you know where to look. Bezos' salary at Amazon is $81,640 per year, less than many engineers at his company. And yes, he pays normal income tax on that, about $20,000. But his salary is irrelevant. His real wealth comes from stock. He owns roughly 10% of Amazon, and as Amazon's stock price exploded, so did his wealth. From $18 billion in 2006 to $118 billion in 2018, $100 billion in wealth creation. But here's the key. He didn't sell the stock. When stock appreciates, it's called an unrealized gain. And unrealized gains aren't taxed. Not until you sell. This is the foundation of everything. The wealthy don't sell. They hold forever, letting wealth compound tax-free year after year, decade after decade, while you get taxed the moment you earn, before the money even touches your account. Payroll, deduction, automatic, unavoidable, permanent. But if they never sell, how do they access the wealth? How do they buy $400 million yachts? How do they fund lifestyles that cost hundreds of millions annually? This is where the genius reveals itself. They borrow. Bezos owns billions in Amazon stock. He approaches a private bank, Goldman Sachs, Morgan Stanley, JP Morgan's private wealth division, and he says, I'd like a loan. $1 billion against my Amazon shares. The bank runs the numbers. Amazon stock is rock solid collateral. So they offer him the loan at 1% interest, maybe 0.75%, for a man worth over $100 billion. This is free money. He takes the billion, spends it however he wants, and here's the critical part. Loans aren't taxable income. This is securities-based lending, and it's how every billionaire lives. Musk does it. Bloomberg does it. The Waltons do it. They borrow against appreciated assets. live on borrowed money, and pay interest rates so low that their portfolio growth easily covers it. If the loan is at 1% and the portfolio grows 10% annually, they're making 9% tax-free while you're getting taxed on every dollar you earn before you can even think about investing it. And when the loan comes due, they don't pay it back with cash. They refinance, take out a bigger loan. Their stock has appreciated more. Their collateral is worth more. So they borrow more, pay off the old loan with the new loan, and pocket the difference. Still no taxes, still no income recognized, just perpetual borrowing, perpetual tax avoidance until death and death. Death is when the system reveals its true purpose. When Bezos dies, his heirs inherit his Amazon stock, and the tax code has a special gift for them. It's called stepped up basis, the cost basis of inherited asset. The original purchase price used to calculate capital gains, resets to the market value at death. So if Bezos bought Amazon stock for pennies and it's worth billions when he dies, all that appreciation, decades of gains, billions in wealth growth. It's never taxed. Ever. The tax liability disappears, wiped clean. His children inherit billions, pay zero capital gains tax on the appreciations, and the cycle starts again. They borrow against the stock, live tax-free, never sell. And when they die, their children get stepped up basis forever. Generational wealth compounding tax-free across centuries. This is dynasty. This is aristocracy. This is a tax code designed to ensure the wealthy stay wealthy while you ... you pay every year on everything forever. But it gets worse. Much worse. Because while you're paying 24% while you're funding the entire system, the IRS doesn't have the resources to audit them. In 2010, the IRS audited 8.4% of tax returns reporting income over $1 million. By 2019, that rate fell to 3.2%, less than half, and for billionaires, even lower. Because auditing someone like Bezos requires teams of specialist attorneys, years of investigation, millions in resources. The IRS doesn't have it. Their budget has been systematically gutted. Between 2010 and 2080, the IRS budget was cut by 20%. 20%. 2,000 fewer agents, less technology, less capability. And the cuts were strategic, targeted. The audits that disappeared weren't random. They were audits of the wealthy, the complex returns, the sophisticated tax avoidance. Meanwhile, if you earn less than $25,000 a year, your audit rate is higher than someone earning $400,000. You're easier, cheaper. You can't afford lawyers. Can't fight back. Your revenue. This is the enforcement gap. The wealthy break tax law constantly, aggressively, and nothing happens because the IRS can't catch them. Can't audit them. Can't afford to fight them. But you make a small mistake, forget to report a side income, and they'll garnish your wages, seize your refund, destroy your life. The system has two sets of rules, one for you, one for them. If this is making your blood pressure rise, if you're starting to see the machinery behind the curtain, then you need to understand the history. How we got here. Hit subscribe, because what comes next shows you the exact moment when the tax code was when the wealthy captured the system, when your future was sold. Go back to 1963. The top marginal tax rate was 91% on income above $400,000. About 4 million today. The government took 91 cents of every dollar, and the economy boomed. The 50s and 60s were the greatest period of economic expansion in American history. The middle class thrived because the wealthy ... paid, infrastructure was built, universities were funded, research was financed, from taxes on the rich. But even then, loopholes existed. The effective rate actually paid was lower, maybe 50%, maybe 40%. But still, they contributed. They funded the society that enabled their wealth. And crucially, Capital gains were taxed at 70%. Selling stock, selling assets, triggered massive taxation. So wealth couldn't escape, couldn't compound forever, had to be taxed eventually. Then came 1964. Kennedy cut the top rate to 70%, sold as stimulus as growth. The cuts passed, the revenue dropped, and nothing bad happened immediately. So the precedent was set. Cutting taxes on the rich was acceptable, was normal, was good policy. This was the crack, the opening, the beginning of the erosion. 1916, capital gains preferential treatment expanded. Gains from selling stock taxed at 25% instead of 70%. Another gift, another loophole, another way for wealth to escape taxation. And the wealthy started restructuring, converting salary to stock options, compensation to equity, income to capital gains, because capital gains were taxed less, less. 1978, capital gains rate cut to 28%. Then 1981, Reagan, the top income rate slashed to 50%. Then 38.5. Then 28, capital gains to 20%. Each cut sold as economics, as supply-side stimulus, as trickle-down prosperity. But the prosperity never came. Not for workers. Only for wealth holders. Only for those with assets to appreciate. And 1980-6... This is the key moment. The Tax Reform Act of 1986 sold as simplification, as closing loopholes. Actually, it codified stepped-up basis permanently, made it untouchable, sacred, beyond reform. That same act created new categories of preferential income, qualified dividends, carried interest for hedge fund managers, each one a door that only the wealthy could access. By 2003, capital gains were 15%, dividends were 15%. While wage income, your income ... was taxed up to 35%. The gap was built, systematized, made permanent, wealth was protected, labor was taxed, and the transfer began accelerating every year. And alongside the tax cuts ... came the spending. Reagan cut taxes and increased spending massively. Defense spending exploded. The deficit ballooned. And who funded the deficit? Not the wealthy. They were getting tax cuts. You funded it through inflation. Through debt, your children will pay. Through the slow erosion of public services. The wealthy got cut. You got that. Bush Jr. continued it. Clinton slowed it slightly, but didn't reverse it. Bush Jr. accelerated it. The 2001 and 2003 tax cuts. More capital gains reductions. More preferential treatment. More loopholes. And then 2017, the Trump tax cuts sold as middle-class relief. Actually, the largest transfer to the wealthy in modern history. The corporate rate cut from 35 to 21%. Immediate, permanent, massive. And for individuals, the top rate cut from 39.6 to 37% modus. Temporary expiring in 2025. But buried in that bill, opportunity zones, a new mechanism for the wealthy to defer and eliminate capital gains taxes, invest in designated poor areas, get tax breaks, while gentrifying those areas, displacing residents, and calling it charity. And estate tax, the exemption doubled from 5.5 million to 11 million per person, meaning a couple could pass 22 million to heirs tax-free. And with proper planning, using trusts, using GR8s, using life insurance tricks, billionaires pass billions tax-free, completely legally. This is the history. 50 years of systematic dismantling. 50 years of loopholes opened and never closed. 50 years of the wealthy writing the rules. And 50 years of you paying more while they pay less, while wealth concentrates, while dynasties form, while democracy dies. Do you see the pattern? Every tax bill sold as helping you. Every reform promised to close loopholes. And every time the wealthy get richer, the code gets more complex, the avoidance gets easier because the people writing the laws are funded by the people benefiting from them. Citizen United made it explicit. Corporations are people, money is speech. So billionaires can spend unlimited amounts buying elections, buying politicians, buying laws, and they do the top 0.1%. About 700 families account for more political donations than the bottom 80% combined. They fund both parties, both sides, ensuring that whoever wins protects their interests. Tax reform that actually taxes the wealthy. Dead on arrival, always. Because the politicians writing it are owned by the people it would tax. This is capture, regulatory capture, political capture, complete capture. The system doesn't represent you, doesn't serve you, doesn't protect you. It extracts from you, transfers to them, and calls it capitalism, calls it freedom, calls it the American dream. But what's the actual cost? What does this transfer mean in real terms? ProPublica calculated that the 25 richest Americans saw their wealth increase by $401 billion between 2014 and 2018. $400 billion. They paid $13.6 billion in taxes, 3.4% rate. But if they paid the same rate you pay, 24%, they would have paid $96 billion. $96 billion instead of 13. That's $83 billion in unpaid taxes by 25 people. In 4 years, scale that across all billionaires, all decades. And you're looking at trillions that should have been collected, should have been invested in roads, schools, healthcare, research. Instead, it compounded in private portfolios, bought yachts and mansions and politicians while your roads crumbled, while your schools deteriorated, while your healthcare bankrupted you. They extracted the wealth that should have funded civilization, and they call you entitled for wanting public services. The wealth gap is now wider than the Gilded Age, wider than the 1920s before the Great Depression. The top 1% owns 32% of all wealth. The bottom 50% owns 2%. 2% for half the country. And it's accelerating because when you pay 24% and they pay 1%, you have less to invest, less to save, less to build, while they compound tax-free forever. The gap mathematically must widen, must accelerate, must become dynastic. This is neo-feudal, a new class system where birth determines everything, where Bezos' children will be billionaires without working, where your children will struggle despite working harder than you did, where mobility is myth, where the ladder has been pulled up, where the American dream is dead, killed by a tax code designed to preserve aristocracy. And what do they say when confronted? What's the justification? Trickle-down economics. The claim that if the wealthy keep their money, they'll invest it, create jobs, grow the economy. Everyone benefits. We've heard this for 40 years, since Reagan, and it's never happened. The wealth didn't trickle down. It concentrated up, way up. Worker wages stagnated, productivity increased, but compensation didn't follow. All the gains, all the economic growth, went to capital, to shareholders, to the already wealthy. Between 1979 and 2019, productivity increased 61%. Worker compensation increased 17%. Where did the gap go? To capital, to profit, to stock buybacks that enriched executives and shareholders. The workers created the value, the wealthy extracted it. And the tax code ensured they kept it tax-free. You work, they profit, you pay, they avoid, you sacrifice, they accumulate. This is the deal. This is the system. And it's accelerating toward collapse because inequality this extreme, this systematic, this mathematical doesn't persist peacefully. History shows what happens. France, 1789, Russia, 1917. Every aristocracy eventually falls. When the gap becomes too wide, when the theft becomes too obvious, when the people realize the game is rigged, revolution follows. Violent, chaotic, destructive. The wealthy know this. They're not stupid. They've read history. They know what's coming. That's why they're building bunkers, buying citizenship in New Zealand, preparing escape plans. They know they're looting a burning building, and they're planning to escape before the roof collapses. While you'll be trapped in the fire they set. What can be done? How do you fix a system that's captured? This rigged, this corrupt. Some advocate for wealth taxes, taxing not income but assets. A 2% annual tax on wealth above 50 million would raise hundreds of billions, would slow the concentration, would fund society, but it's dead on arrival because the politicians who would pass it are funded by the people it would tax. They'll never vote for it, never allow it, never let it happen. Others advocate for higher income taxes, 90% on income above 10 million, like we had in the 50s when the economy boomed. But again, dead on arrival, because high income taxes don't affect the ultra wealthy. They don't have income, they have wealth. And wealth isn't taxed. You'd be taxing doctors and lawyers and small business owners, not Bezos, not Musk, not the billionaires. The real solution, tax unrealized gains, tax wealth as it grows. Not when it's sold. Not when it's realized, when it's accumulated, a mark-to-market system. Every year, calculate wealth, growth, tax it at normal rates. This would work. This would actually tax billionaires. This would end the scam, which is exactly why it'll never pass. Never even get voted on. Never be seriously considered. Because the system protects itself. The wealthy control the politicians. The politicians write the laws. The laws protect the wealthy. It's circular, self-reinforcing, unbreakable, without revolution, without collapse, without the system destroying itself. If this has destroyed your faith in tax fairness, if you're seeing clearly that the system is designed to extract from you and protect them, if you're understanding that your children will never catch up because the game is mathematically rigged, then you need to see what we're revealing next. Subscribe now, because the next episode exposes the specific politicians blocking reform, the exact amounts they receive from billionaires, and why tax justice requires not voting, but something far more radical. The names will shock you. The corruption will sicken you, and the solution ... will terrify you. Bezos pays 0.98%. You pay 24%. This isn't broken. This is designed. This is working exactly as intended. Extracting from many, concentrating to few, transferring wealth upward permanently. Mathematically, inevitably, your taxes fund his empire. Your contribution subsidizes his avoidance. Your sacrifice enables his accumulation. And every year the gap widens. Every year more transfers. Every year the system works more perfectly, more efficiently. The wealth transfer scam isn't theoretical. It's documented. It's measured. It's in the IRS data ProPublica published. It's in your paycheck deductions. It's in their quarterly wealth growth. It's in the mathematics of compound interest applied to billions versus thousands. It's in the difference between labor tax at 24% and capital tax at 0.98%. This is theft. Legal theft, systematic theft, generational theft, and it's accelerating every tax bill, every loophole. Every politician bought, every reform blocked. The scam perfects itself. The transfer accelerates. The inequality widens until something breaks. And when it breaks, when the math becomes unsustainable, when the people realize they've been robbed, the wealthy will be gone in their bunkers, in their compounds, in New Zealand, while you're left in the ruins, in the chaos, in the collapse they caused and profited from. The scam is complete. The system is captured. The transfer is permanent unless you wake up, unless enough people see, unless the lie becomes undeniable. You pay 24%. Bezos pays 0.98. That's not capitalism. That's feudalism. And you're the serf